Nvidia just posted a $57 billion quarter, up 62% year over year. Beat Wall Street's wildest expectations. Shares spiked 4%. The S&P 500 popped 2%. Jensen Huang went on the earnings call and told nervous investors there's no AI bubble. From his vantage point, he sees something very different. Meanwhile, Peter Thiel dumped his entire $100 million Nvidia position. SoftBank sold their entire $5.8 billion stake. Michael Burry, the guy who called the housing crisis, just disclosed over $1 billion in put options, which is betting against Nvidia. So either the smartest investors in the world are idiots, or Jensen Huang is selling shovels to a gold rush where the gold mines are shorting the shovel company. Like and subscribe and share this with somebody who walks their dog on your yard without picking up their poop. They may need to know some of this. I would appreciate every like, every subscribe. Are you ready? Let's go.
This is drugs. This is your brain on drugs. Any questions?
Here's what Jensen Huang wants you to believe. Nvidia is in every cloud. Demand for Blackwell GPUs is off the charts. Cloud GPUs are sold out. Compute demand is accelerating and compounding across training and inference, each growing exponentially. Translation, everyone's desperate to buy his chips, and he can't make them fast enough. And the numbers back him up. $57 billion this quarter, forecasting $65 billion next quarter. Another $500 billion in revenue over the next few quarters. Nvidia accounts for 8% of the entire S&P 500. If you have a 401k, you're tied to Jensen Huang's fate, whether you like it or not. When analysts ask Huang about concerns that his deals with OpenAI and Anthropic might be creating circular financing, the kind that heightened concerns of an AI bubble, he brushed it off. Business is very strong, he said. We have done a good job planning for a very strong year. Cool. So why is Peter Thiel, who co-founded PayPal and was the first investor in Facebook, dumping every single Nvidia share he owns? Why is SoftBank, who spent the last decade throwing money at everything with a pulse, selling their entire $5.8 billion stake to fund a $40 billion bet on OpenAI instead? Why is Michael Burry, who's been wrong approximately 1.5 times in his entire career, betting over $1 billion that Nvidia is going down? His reasoning? Big tech is understating depreciation on rapidly aging AI hardware. In other words, the chips everyone's buying today will be worthless tomorrow, and nobody's accounting for that in their balance sheets. So let's talk about what's, actually happening here. Microsoft and Nvidia just announced $15 billion in investments into Anthropic. Anthropic committed to spending $30 billion buying Microsoft's Azure compute. Microsoft's using Nvidia chips to power Azure. So Microsoft's giving money to Anthropic so Anthropic can give money back to Microsoft to buy chips from Nvidia, who's also investing in Anthropic. Got it? Good, because it gets dumber. Amazon just raised $15 billion in bonds, their first U.S. bond sale in 3 years. We talked about this in the last episode. They got $80 billion in demand before cutting it in half. Why? To fund AI infrastructure. Their capital expenditures are hitting $147 billion next year. That's 3 times what they spent in 2023. They also just signed a $38 billion deal with OpenAI to supply hundreds of thousands of Nvidia GPUs. Alphabet sold $25 billion in debt. Meta issued $30 billion in corporate bonds, the biggest offering of the year. Oracle raised $18 billion. Global issuance hit $6 trillion this year, and JP Morgan forecasts the U.S. high-grade market will hit $1.81 trillion next year. Everyone's borrowing money to buy Nvidia chips to build AI infrastructure to chase revenue that doesn't exist yet. OpenAI has $1.4 trillion in deals lined up. Their actual revenue this year, less than 1,000th of the planned investment, according to analysts. But sure, there's no bubble. Jensen said so, Meanwhile, Oracle announced a $300 billion deal with OpenAI and immediately lost $315 billion in market value. The market looked at Oracle betting everything on OpenAI and said, yeah, that's worth a negative $15 billion right there. And when I say a bubble, I understand AI is not going anywhere. The tools we have, if this is as good as it gets, it's not going anywhere. It's great. It helps us. It helps me. Um, it's not the AI that's in a bubble. It's the investments that are in a bubble. Some of you may be too young to remember the dot-com bubble. I'm certainly not. Certainly not young enough, and certainly will never forget it. So what do Thiel, Burry, and SoftBank know that Jensen Huang doesn't? Well, let's start with the technology itself, shall we? A Chinese social media company called Weibo just released an open source AI model that costs $7,800 to train. $7,800. It beats models that cost between, $250,000 to $750,000. It outperforms DeepSeek R1, a 671 billion parameter model. It holds its own against Claude Opus 4, matches trillion parameter models on math and coding tasks. So while America is spending $6 trillion financing a debt carousel to buy Nvidia chips, China is deploying training models for the cost of a used Honda Civic. They're even making legitimate strides on the quantum computing side, and we'll save that for another episode. But that's not even the biggest problem. The biggest problem is depreciation. Nvidia's Blackwell GPUs, the ones with off-the-charts demand, were unveiled in March. They're not even a year old, and they're already getting obsolete. AI hardware, as you know, anybody that's bought a computer knows, it has the shelf life of milk. You buy it, it's cutting edge for a couple of months, then, China comes along, announces something faster, or, anybody announces something faster and cheaper, and suddenly you're holding very expensive, paperweights. And as Michael Burry pointed out, big tech isn't accounting for this in their financials. They're booking these chips as long-term assets when they should be expensing them like consumables, which means everyone's balance sheets are lying about how much this is actually costing. So what are all these Nvidia chips actually doing? Well, 51% of the internet is now bots. Believe it or not, first time ever that automated traffic overtook humans. 64% of X accounts could be bots responsible for 76% of peak traffic. A lot of numbers, I'm sorry guys, but the numbers don't lie. 95 million Instagram accounts, 9.5% of the total, are fake or automated. About half the internet is AI written. According to Menlo Ventures, chatbots and AI tools summarize that material and hand it back to you. You end up reading machines summarizing other machines. So we're spending $6 trillion to build infrastructure so bots can talk to other bots while humans retreat to Discord and private group chats because they can't tell who's real anymore. Oh, and speaking of real-world applications, you'll like this one. A toy company just pulled their AI-powered teddy bear after researchers found it was giving kids step-by-step instructions on how to light matches and detailed explanations about sexual kinks. The bear, powered by GPT-4o, the same model that runs ChatGPT, would surely explain bondage and teacher-student roleplay, then ask the kid, "What do you think would be the most fun to explore? I'm Teddy Ruskin." Meanwhile, Claude, Anthropic's supposedly safe AI, was hijacked by Chinese hackers and used to autonomously conduct cyber espionage on 30 organizations. The AI executed 80 to 90% of the operation with minimal human help. So this is what they're building, a dead internet full of bots powered by depreciating hardware funded by circular debt that can't stop a teddy bear from teaching kindergartners about BDSM, but can autonomously hack Fortune 500 companies. And Target just announced you can now shop through ChatGPT. 18,000 employees using it across headquarters. Help me plan a family holiday movie night, and boom, curated blankets, candles, snacks. Doesn't that sound lovely? The future is here and it's stupid, but very interesting. And it's expensive too. But here's what Jensen Huang doesn't want to talk about on earnings call. The entire AI economy is interdependent to the point of systemic risk. That's the bottom line right there. That's what I've been talking about all these episodes. They're too close together. They're too interwoven together. It's a dangerous sign. Microsoft's invested in OpenAI and Anthropic. Amazon's funding OpenAI. Google's funding Anthropic. Nvidia's invested in everyone. Everyone's invested in Nvidia. If OpenAI fails to hit its revenue targets, and remember, they're currently at less than 1,000th of what they need, the entire thing could collapse in a heartbeat. All it takes is just one little pebble rolling down that hill, and then or one little snowball, and then the avalanche occurs. Microsoft would lose billions. Amazon's 38 billion GPU deal evaporates. Anthropic's 30 billion Azure commitment disappears, and suddenly Nvidia's sold out demand vanishes overnight. And Sundar, I call him Pichai, it might be Pichai, I don't know, admitted this week while announcing Google slipping on its climate targets because AI uses too much energy. There are elements of irrationality in the AI boom. And oh yeah, climate change. Climate change. I think climate change is absolutely real. On the other hand, I think climate change is just a total farce and has no bearings, no bearings in physics, nothing to back it up. But I think it's absolutely true. What do you think? And no, I don't think it's true at all. Be sure to tell me what you think in the comment section. And if you haven't read the comment section from the last episode, that's what I'm talking about. Anyway, Sundar compared it to the dot-com bubble. So did I. There was clearly a lot of excess investment, but none of us would question whether the internet was profound. I expect AI to be the same. So I think it's both rational, and there are elements of irrationality through a moment like this. Translation, he's saying, yes, it's a bubble. Yes, people will lose everything, but also AI is real, so good luck. So maybe don't invest right now. Maybe pay attention to who the big climbers are, the top guys, maybe the guys out there on the fringe, and that don't lose as much as some of the others, and invest in them after it pops and enjoy the ride back up. Because it'll go back up. It always does. If it doesn't, then, we're all screwed anyway. Okay, the AI industry is now worth $4.4 trillion, making it the fourth largest economy after the US, China, and Germany. Jensen Huang says there's no bubble. Peter Thiel says there is. Michael Burry's betting $1 billion on it. One of them is right. The other is selling shovels, and the smart money is running for the exits. I'll see you in the next episode.